Hey, this week has been absolutely crazy. I keep trying to get to these videos and they keep getting put off because I'm doing television shows and other things. But writing research obviously is one of them and getting prepared for some speeches. So my apologies for not getting these out sooner. But wow, craziness this week with GameStop, AOC, Reddit, go down the list. So let's get through some of these right now. Let's start off with AOC and GameStop. That's a fascinating story. For years, people have been trying to educate the public on how to trade, right? And certainly there have been particular brokerages that have been after people to do more with options. Well, guess what? They finally learned how to use them and use them very effectively. It's hilarious to me to see what happened with Wall Street bets and the ganging up a little bit on these big hedge funds who created massive shorts in stocks like, I don't know, Naked Brands or AMC and certainly in GameStop. And what these group of investors did clearly was they went out and bought options, like call options, way out of the money call options. And when you do that and the price starts going in that direction, it creates all sorts of craziness. If enough people do it and enough people buy, you can buy the underlying stock too. But that momentum really pushes the stock price up. And then some of these big hedge funds, get in big trouble and they've lost. I saw an estimate one place about $70 billion. Some have lost less, obviously, but it's called into question the whole structure of whether or not it's legal for people on Reddit, on this particular subreddit, to encourage people to buy the stock, if that's price manipulation. Just to read exactly what price manipulation is for the SEC, it's transactions which create, you like how I use a sticky note for this, it's transactions that create an artificial price or maintain an artificial price for a tradable security. And I guarantee you the SEC is looking at this. I guarantee you the CFTC is looking at this. Treasury, White House, everybody's looking at it. There's going to be some hearings on it. The thing that stands out to me is this. There is critically a problem with market structure on this. I don't blame what's gone on. I don't blame those investors. I think they did what they should do, just as the hedge funds who went short did what they could do. But the thing that drives me crazy about this is the market structure aspect of it. How can one entity like a hedge fund have a short position in a stock that's 140% of the issuance of that stock? That's what I want to know, because that's the underlying problem here. Not that a group of investors ganged up on him, but that one investor could invest that much and control that much stock. So that's where I think the rubber meets the road for the SEC. I guarantee you when Gary Gensler gets there and starts taking over, they're going to look at and do a deep dive on this. So we'll see what goes on there. But now that Robinhood is back up and functioning and they're allowing trading in these stocks, you might see more of this. And the craziness about it is that people are only looking on the upside of people buying stocks, right? What happens if they start to look at who's got really large positions in the stock overall? That's where things get interesting. If they start picking on a stock that, I don't know, like say Tesla, that's risen up so dramatically. Let's say they start putting, put options on. Instead, way below the current the strike price, way below the current stock price, then things could get interesting to the downside. So let's keep that in mind. There's both an upside and downside to this, and both are a part of a market structure issue that's probably going to get addressed at some point. All right. That aside, we've seen a ton of executive orders out this week from President Biden. Just three really quickly. One, and I'm just going to read these off, tackling the climate crisis at home and abroad, right? That's a big push on the environment and sustainability. That's returning to the Paris Climate Accords. That's asking government agencies to review all of what they're doing when it comes to ESG. There's just so much going on there. And also the cessation of new leases for fracking on oil and gas leases. That's also going to shut down some of the smaller developers there in the energy space. So we'll keep that in mind and keep a close eye on that. But that was one of the big executive orders I've been warning about and talking about. Another one is to organize the government for the COVID-19 rollout of the new vaccines that are coming. And we actually got some great news on 2 other vaccines that were had great success that are 1 jab, not 2 shots, right? So that's great. That'll increase the likelihood of people getting it and having it be effective. Asking people to go back to get a 2nd shot, maybe not as good. And on this space, just really quickly, one of the things that's really worrisome, of course, is those mutant strains coming from the UK, coming from South Africa, back to the United States, or coming into the United States, not back, but coming into the United States. There's some outbreak in South Carolina right now of the South African one, and those are more virulent, they're stronger, and they're more contagious. Now, just to worry everybody, this is exactly what happened in 1918 and 1919. I go through this in my book, World Event Trading, but basically the first go round was pretty bad with the flu virus back in 1918, and then it got a lot worse in 1919. And that's what's at risk right now for the virus. And it's great that Moderna said they could come out with a booster shot for theirs, but that's a big worry over the next 4 to 5 months before we get into summer. So keep that in mind. All right, and the third thing is the revocations. A third thing, meaning the third executive order I'm going to reference tonight, is the revocation of the previous executive orders by President Trump. And one of the ones that I personally liked, of course, I was at the CFTC and engaged in regulatory reform at the time. But one of the things President Trump said, look, if you're going to make a new regulation, you got to kick 2 out. So his 2 for 1 there was interesting, and it really helped accelerate the regulatory reform that was going on. Now, look, I know there's a lot of people saying, yeah, Andy, regulatory reform for the EPA and all of the climate stuff and all of the environmental stuff was bad. And like, look, I get it, but that wasn't the only place that regulatory reform was going on. So there was a lot more going on here than most people realize. In that sense, we had gone 8 years after Dodd-Frank and Volcker, and so yeah, we kind of needed to look back and see how those were doing. Some of them were failing miserably. Some of them were doing pretty good. That was kind of the point in the financial services sector. But now President Biden has rolled those off. So we're going to see a much stronger hand in regulations coming. Now, it's not necessarily from the Treasury, but I expect every other agency to really be focused on climate, looking at carbon footprints. And I expect Gary Gensler, whenever he takes over the head of the SEC, to really focus on that quite a bit after he gets done ripping apart what happened with GameStop. All right. So a lot of craziness is going on. And by the way, we had a Federal Reserve meeting this week, and they basically said, yeah, the foot's on the gas until we can really see those 10 million people come back to work. So there's that going on. Oh, wow. Crazy week. I expect next week not to be as insane. We won't see the breadth of the executive orders coming from Biden, so that'll be a little bit calmer. So that's good news. And I'm going to be busy. I'm talking for the Financial Services Institute on Monday. If you're a member, please join us. I'm also talking to Premier Healthcare. It's a GPO on Tuesday, going over a lot of things that are happening in healthcare. So many changes that are coming. So if you get a chance, get to those. All right. That is a crazy week. I hope you survived it. More coming up next week. If you like these videos, click on the icon below to get more. If you want to get them every week, click on my picture to subscribe. Please share them with anyone you think would like them and would benefit from understanding the future of the economy. I'm Andy Bush. Thanks for watching.